Hi guys, I'm back for another market update. Sorry, it's been a while. Been kind of sick. You might be able to hear it in my voice. But been a lot of action, so time to make a new video. So just a zoomed out look on a weekly. Things look like they're reversing. Obviously, we had this very scary candle during 2 weeks ago where we hit the 6,000 low, and ever since then we had this really nice doji candle to reverse the trend with higher volume than the previous weeks, which could signify temporary low or permanent low, I could say. And once we started trading above the candle here, it was a good sign. And then right now we're actually sitting on a really good spot. So the high of last week's candle was 11,250, and right now the price is sitting around that zone. So once we're able to break that candle again, and then we could see another leg up, and things will start looking good. But if you want to look at it in a very simple matter, it's just at the end of the day, it's like this, right? Connect the highs. We have a downward trend, and until we break this, it's still considered a downtrend. Another thing to note, the 10 EMA, we're getting stopped at the 10 EMA right now on the weekly. Last week struggled to close above it, and closing above that would be the first sign of a reversal of the downtrend, and then we're going to go back to a bullish trend. So if you zoom out and look, this whole time we've been above. Almost this whole time, since 2017 January, we've been above the trend. We had one scary week here where we went below, back up. 1 week below, back up. So basically, being above the 10 EMA on the weekly generally represents a bullish bias in the market. Onto the daily. So this is just a very simple zoomed out look of the daily bullish channel that we've been following most of 2017. And I spoke about this in the previous videos, but this channel was respected. So we had highs, lows, and then highs, lows. We got respected a few times. And once we broke here, we kind of went on that parabolic CBOE hype craze mode here. And I was telling my friends and other traders during this whole time that, yeah, it's great prices going up, but when things go up at this kind of rate, it goes down just as fast as we can see here. So I was actually concerned about that the whole time. And we did have from edge to edge around a 70% correction. So the price likes to fuck with traders, obviously. So when it left this down channel temporarily, maybe for a few hours, you could probably zoom in and see, but I don't really want to waste time. But when it went below this, it scared off a lot of traders, and this was like the panic selling from like 6,500 ish to 6,000 was because of that. Because if it left this channel, then pretty much all hope was lost. So, but we recovered quickly on the daily, and we cleared the 10 EMA after a few days of struggling here in resistance, and now we're up. So really, I was telling everyone, I mean, we don't need to go up thousands every day. If we just follow this nice trend, nice bullish trend, all of 2018, let's say. Obviously, this is a stupid kind of way to estimate price, but let's say we follow this trend, even let's say by June 1st. June 1st, we're looking at a 27,000, 27 to 27,000 high, 13,000 low, which is way better than right now. So things are looking good. And same thing as I showed on the weekly. Just have to watch out for this trend line. So once this can get broken, things are starting to look really good. Officially broken, right? There was a more short-term one that people were looking at, and that helped people make some early entries, like kind of like this one here. You could make it pretty on your own chart, but you guys know what I mean. So that's that. So that's the basic zoomed out channel. Looks good. I like it. So this was kind of like the price forecast that I was dealing with when we had the whole downtrend. So we had two like downward trend triangles, and the big one, the target was around 5K. Smaller one, the target was 8K. So on this chart, the predictions weren't really accurate because we're reversed kind of in the middle of nowhere, right? We're reversed in between my price targets, so not the best analysis. I can admit that. And maybe some people thought this cluster of resistance was good time to buy. I don't know, but we kind of reversed in the middle of nowhere. Like, no one that I talked to, none of the traders, many of them that I know were like 6,000. People thought like 5,000 or 7,500 or 4,000. No one thought 6,000, but that's how it is. All right, so once we reversed, we had a few resistance. We had like the 200 EMA, the moving averages, and right now we've cleared all of them. So the last point of resistance is this one here, around the 12K. So once we break that, we'll be breaking this official downtrend as well, and everything will be back to bullish bias. I'm gonna move in. So this is the fib retracement of the entire trend from up to down. So this whole 70% move, just fibbed it out. And right now we're sitting at the 0.382 resistance. So 11,300 is that. So once we clear that, things will be looking good. And same thing, we have the downtrend here. So most of the charts are pointing to the same thing. And yeah, that's all I could say here. This is this was actually obviously in hindsight, but if you use this chart as your fib, you would have been able to guess the bottom nearly to the dollar. So this is the target you got if you fibbed out the initial wave of dumping. Many people think this was an insider dump, and if you fibbed out this top to bottom here, the 1.6 was 6,000. So according to this chart, the next wave of resistance we're at right now at 11,142, and the next one's at 13. Okay, so this was the this is old. I gotta get rid of this. This is like when I drew it here. So we had this down channel that we're respecting on a daily. Once we broke down it, it was scary. We came back, we beat this first level of resistance, and we're back in the channel. So obviously we gotta break these resistance points, but this channel is still in effect as if we are not able to break this one of these top lines. So this is the worst case bearish scenario. Like let's say if it was a bear flag kind of situation. These were also other price targets that we had on a smaller time frame, 4-hour time frame, symmetric triangles. And once again, the targets were off, right? This was the other target I had around 53.65, and we missed that around 13% miss, so can't say that was valid. And yeah, we're other than that, these were the resistance points. We're beating it, and we're also at the triangle tip, kind of like the tip of the triangle's resistance point here. So this is a whole cluster of resistance, but we're doing pretty good at the moment. So I see strength. Next, we're gonna do the cloud analysis here, and so let me get rid of the moving averages because it's getting really hard to see stuff. There you go. The RSI is not saying much. We're above 50, which is good. So I'm gonna get rid of that. So give me 1 second. Okay, yeah, 1 day looks good. Okay, so 1 day cloud analysis. So Jesus Christ. So we had a bearish cross here. Price pierced right through the cloud, and we've been living below the cloud this whole time. And I stressed this in my videos a few times, but we've never lived below the cloud for this long. So this point where the Kijun is coming up here at 11,622, and if this is indeed a bear trap, which this would be the greatest, I'm sorry, bull trap, this would be the greatest bull trap of all time. It would be an 84% increase. This would be a crazy bull trap. But if it is indeed a bull trap, then this Kijun slash this resistance point slash this whole cloud top will be rejected. So this is really big price point to watch out for, around 11.5, 11.6. And if we go there and we're rejected, then we could see another leg down. I don't know, God knows to where, right? Because I don't play around. I don't play around with the cloud, guys. This has been the best indicator probably for the whole year. And you guys can see the cloud was never red. We were never below the cloud. We're below the cloud for 1 day here. That's it. This whole year. So like, gotta watch out. And would really be nice if we just go above the Kijun, blow past it, and get above the cloud, and then maybe stabilize around 14, 15K, and then can continue up. I'll do a zoomed in look on the cloud too. to get maybe some more short-term signals. So short-term signals are actually not bad. By short-term, I mean 4 hour. So we had a TK cross here. This is a premature entry. You don't have to take it. It's a little bit risky. Then price entered the cloud, and we pierced the cloud. So a lot of people like to enter the Kumo breakout, it's called. So once we leave the cloud, you can either enter here or here once it's confirmed, the next candle. And then right now everything looks good. We left the red cloud where the cloud is green again, and if we are gonna dip, look to buy on the Kijun buys here at 9600. Beyond that, it's the same resistance points at other charts that we're speaking about. And then on the 1 hour, so 1 hour's been pretty good too if you've been trading it. So 1 hour is getting a little confusing, but we've had a few recrosses. So this is during consolidation, right? But once we broke out, like let's say around here, you entered, you could have bought this whole dip here. A lot of people got scared here. I didn't sell because, see, when you have the indicator, you have some more knowledge than other people. So you see here, bounced off the cloud, right? And here you had one candle scare, no big deal. Bounce right after 2 hours later. And you could have entered here or here, the recross, still in profit. So if you want to buy on the short term, dips be around 10.7, 10,700. And yeah, I mean the hourly cloud's good, right? It's green, we're above the cloud. This is above price. TK bullish, TK cross above cloud, so we're good. Finally, just want to take a look at some of the moving averages, and generally in a market, I mean, it's pretty obvious, but in a market when the moving averages are all in line from the shortest to the longest, it's showing bullish bias, and the opposite is true, right? So when we're bearish here, this is a 2 hour chart, because just for example, because it was the most valid. So once we had this big drop from 12 down to 6, you see how all the moving averages were in line? So the 10 was here. So this is the 10, 30, 50, 125, and 200. So showed the downtrend, right? And then once the 10 starts crossing the 30, and then one by one, the moving averages cross each other, you can see it's slowly starting to build the bullish bias. And right now, all moving averages are in order. So after this cross here, everything's in order, right? So now a valid strategy is to long all touches of the moving average. So on the 2 hour, you can try. 2 hour looks good right now, so it's bouncing off the 50 on the 2 hour a few times. These would have been good dip buys. 3 hour looks okay too. 3 hour you would have bought on the 30 EMA. 4 hour is still trying to cross all of them together, so we have some time on the 4 hour before it's valid. But you can start doing it on the 30 and 50 crossing up here, and obviously we have a holy cross coming up on the 5200, which is good. And yeah, that's about it. And just want to zoom out to on the weekly before I finish it off. So let me get rid of these. So yeah, guys, if you really want to think about the trend in the bigger scheme of things during the whole year, this 10 EMA needs to be broken. And right now, if we close around this price, we're up. But I want to see it close like maybe around a little bit higher, around 11,700. And then once we're above the 10 EMA, things will start looking good. So good luck trading, guys. And I'll be coming up with another video the next few days once we see some more price action. Take care. Bye-bye.